Welcome, ladies and gentlemen, Commodity TV, today out of our studios here in Switzerland. And sorry that we are looking a little bit more on the leisure side, but it was just by coincidence that Tobias Tretter stopped by here. He is the fund manager of the Next Generation Metals Fund. And of course, when I have the chance to interview him, because he's normally traveling so much, I do so. Tobias, great pleasure to have you here. Thanks for taking the time.
Thanks for having me, Jochen.
Yeah, I hope I'm not interfering into any vacation slots or anything else, so that's perfect. Yeah, you're managing the Next Generation Metals Fund, and of course we talk about battery metals, probably hydrogen, vanadium, stuff like that. So maybe you can give us a short idea, or let's say a little market overview. I would say let's start with lithium and especially cobalt, because I think those are the metals which are a lot discussed in the last months.
Yeah, I think a lot happened in the last few months in the battery space. I think a lot of good things happened, which are not really reflected by the market. Like what we heard yesterday, Glencore is shutting down one of their mines in the DRC, which will take away about 20% of the worldwide production of cobalt. The cobalt shares didn't really react to it because nobody is really taking attention. Nobody cares about what's happening within the sector. Right now, Canada, worldwide, everybody is looking at cannabis. Everybody now right now is looking again at gold. But nobody is really looking at battery metals. But a lot of things, good things are happening behind the scenes in the battery sector.
Yeah.
Cobalt, for example, now minus 20%. Of the worldwide supply from the end of this year onwards. It will be a little bit of an issue for the whole battery sector to replace those 20%, especially to replace those 20% in the next few years. We are still in a situation where cobalt is in a little bit of an oversupply, but the market, the sector itself, thinks that from 2022, 23 onwards, we will be in a deficit situation, and I think it can even happen a little bit earlier than that.
How important do you rate the, let's say, e-mobility sector, especially the e-vehicle, light vehicle car sector? Because I read this morning, like, I think that approximately 7-8 years ago, we had like 250,000 cars, e-cars in the world on the roads, and by end of this year, it should be something around 5.7 to 6 million cars easily. And I mean, all those are powered with batteries, so they all need cobalt, right? And lithium, of course.
Absolutely, absolutely. Yeah. And it's not just that. First of all, so far this year, there have been about 1.1 million cars electric cars being sold so far in the first 6 months. Till the end of this year, we are expecting between 2.5 and 3 million cars will be sold. So if you're talking about so far in total, there have been 5 to 6 million. We are about having this year about 50% of the cars, electric cars that have been sold over the last few years. And even though we are seeing a trend in the car sector that less and less cars are being sold, and we are having some issues in the car sector in general, in the electric cars, that's not really the case. The growth rates are still double digits, and I don't think that anything can stop the trend towards electric vehicles.
And also if we think about, let's say, mass energy storage facilities, I remember there are already like 20-foot, 40-foot containers which are used as batteries, even some large mass storage facilities are built up. This is all massive demand, right?
The demand just knows one direction, that is growth, growth, and growth, and it's double digits. And nobody really cares about it, as you said. Energy storage, in most of the research reports, and most of the analysts, they do not even take the energy storage into consideration. Also, when we are going back to the cars, everybody always calculates with what the cars need right now. But the cars will need more and more lithium. They will need more and higher power, energy sources, batteries in the future, because the cars are getting better. The cars need different kind of lithium. They need more hydroxide in comparison to carbonate, because what do people want? People want to drive longer. They want to have the cars being charged faster, and so on and so on. So the demand is growing. So the demand, even though the same cars are being sold, the demand or what the battery itself has to source will go up.
Exactly. Is there also a trend, like, let's say, to larger batteries?
You mean in the car sector?
Yes, in the car sector.
Yes.
Because I have a little bit the feeling like, because I'm a reader of Automotorsport, the largest car magazine here in the German-speaking region. And if I compare it like 2 or 3 years ago, we were talking about, let's say 30, 40 kilowatt hours. Yeah. And all of a sudden we talk about 80, 100. I think even Tesla is doing 150, right?
Yes.
Yeah.
Yes. That's exactly what it is. So the battery space has to go up. So we will need more lithium. We will need more cobalt for this growth in the batteries itself. And what we cannot forget is right now, we don't really have any kind of cars from the traditional car manufacturers. We don't really have a lot of electric cars right now from a Mercedes, a BMW, a Porsche. They are coming, but they are coming 2020, 21, 22. And that will be the time when really everybody will be a little bit scared, like, okay, what's happening? Where do we get all the metals from that we really need? And for us as a fund manager, it's always the best or the easiest. We are just looking at what happens on the battery side. How many new battery factories are being built? And we are seeing new battery factories, either just an increase in capacity or new ones that are being built, being announced on a weekly, monthly basis. So there is no end.
No choice. You need to have the metal, right? Absolutely. If we move a little bit away from lithium and cobalt, what's about, let's say, vanadium? I was reading about vanadium redox batteries and stuff like that. Which metals would you consider in addition to lithium and cobalt, which are interesting, which are, let's say, really important in the next years? Which do you really need?
Okay, the vanadium redox battery is just for storage. It will never ever be used for the cars. It's really purely for storage. Vanadium, I also know a lot of companies that are going out. Vanadium is still mainly used for steel. So you need a really special kind of vanadium that is really even possible to be used for vanadium redox batteries. So you have to be a little bit careful. The vanadium demand, I think, will not grow that much. We, as fund managers, we do not have any kind of vanadium companies in our portfolio.
That's interesting. Wow.
What is completely underestimated is the usage of nickel. We see a huge problem on the nickel side, because when you're looking at the battery developments, and I'm just coming back from a big conference, from one of the largest battery conferences in Chile. The batteries are developing, and the batteries are going away from the traditional batteries that we are knowing or that we are having right now towards the batteries with more nickel, less cobalt, the same amount of lithium, and at the end of the day, we are talking about the solid-state battery. The solid-state battery will be then the battery at the end of the day. This will be the best battery that you can produce. It will take another 4, 5, 6, 7 years till we have the first solid-state batteries in a commercial production. But it will happen. And if you're looking those 5, 6 years ahead, the solid-state battery will need no cobalt anymore, but it will need a lot of nickel. It will still need a lot of lithium. I think those are two of the metals that we are really focused on.
Okay. Before we come to some companies you maybe want to talk about, what's about copper? Because I always have the feeling a lot of people forget about copper. Copper this morning was 250. Honestly, I don't get it. Aside some recession feelings on some people who are commenting on the markets, but I see it completely vice versa, because I have the feeling we need charging stations. We need to wire the cars. I mean, in a Tesla has 8 kilometers of copper wire inside. So what's about copper? Is this a contrarian aspect, or do we miss something? Why it's so cheap?
I think the market is missing something, but it's always the same. It's always the chicken and the egg problem. At some point, everybody will wake up and everybody will scream for, hey, we need more nickel, we need more copper. But then it's already too late. Because right now what we are seeing is that the copper demand is growing, and the copper demand is growing even without all the electric vehicles. And what you said, it's not just the electric vehicles itself, it's also the whole infrastructure that needs a lot of copper. But the copper demand itself is also growing, and what we are seeing is there are not enough investments to grow the demand side.
Absolutely. Let's talk about some companies. What are, let's say, even if you're allowed about to talk, but what are your top picks? What companies you are more on your favorite side? Let's say, do you focus more on exploration? Do you go more to the development side, or do you say, with lithium I go more, let's say, with the large producers and then maybe some good development companies? What's your thinking as a fund manager?
As a fund manager, you always need a mix. Yeah. So you cannot just go with pure exploration or pure development. Yeah. You also need the producers. I think there are opportunities in all three different kind of sectors. Of course, you're always having the biggest chances, but also the biggest risk in exploration companies. For us, the main investment criteria is management. We see way too many companies that have great projects, but the management just destroys the whole company or destroys the potential of the company. And not to mention any kind of names, but there are some development companies where the share price should be 10 times where the share price is right now. But the management, unfortunately, did dilution at a way too low price. They didn't calculate the capex at the right way, and so on and so on. So there are a lot of homemade issues that are destroying the potential for investors and for the share price.
Okay. Can you mention some of your favorite picks in the fund, for example?
I can mention some of the favorite picks. What I maybe want to mention is, first of all, there are not that many regions in the world anymore left where you can even invest. So if you're looking at lithium, for example, lithium is being produced mainly in South America, in Chile, and in Argentina, and then on the other side in Australia. When I was at the conference in Chile, I think it was clear that Chile is not really an investment-friendly kind of country. For example, Corfu, the government-owned organization, was clearly mentioning it that they are taking 25% of the production of SQM, that they are selling. Oh, there was even an official slide for that, where they are just selling it to whoever is interested in 25% of the production of SQM.
Wow.
Which is more a communism kind of style than a very investment-friendly style. So I think for an investor like us, Chile is not really an interesting place for us to put any money at work because it's just too risky. If you're having a mining exploration project, you have to put in a lot of money at the beginning, and then you're making money once the company is in production. So you're making it then at the end for 20, 30, 40, 50 years. But if I don't have the political stability, it doesn't make any sense to put up the money in front. Therefore, countries like Chile is not really our favorite place at the moment. Argentina, I don't know if you heard it, but yesterday the first election kind of results are not really friendly towards Macri.
Oh, really? No, I didn't see it.
As the current president in Argentina. So there might be a political change in Argentina happening as well. Which also might not be that investment friendly. And then honestly, we are not having that many places anymore left in the world. We have then Australia, and maybe we have to go back to North America, to Canada, or to the US, which are the more mining friendly states. So that's also where we are focusing a little bit more our investments towards, going towards the investment friendly states.
If you, for the end of the interview, if you would have to make a little bit of a guess, let's say within the next 2-3 years, where do you see lithium, where do you see cobalt, where do you see copper?
Good question.
Approximately. We are not nailing you on that.
Okay, good question. So what I do think what will happen, let's start with cobalt. Cobalt, I do think the cobalt price has some legs right now. So I think the cobalt price will appreciate. I think the cobalt price consolidated way too much. So I think we will see an increase in the cobalt price. The cobalt price can easily double from the current levels. If you're talking about down the road, 5-10 years, I don't see much potential for the cobalt price. So whenever you're investing for the next 2-3 years. If you're looking at lithium, it's exactly the opposite. For lithium, I think the turning point is most likely 2020, 2021, when everybody will realize, oh, we need the lithium supply to grow from 300,000 tons right now a year to 1 million tons a year. We will not be able to grow the lithium supply from 300,000 tons to 1 million tons. So the lithium price will increase, but I don't want as a fund manager, I don't want the lithium price to increase because it will just create other issues that are coming with a lithium price that is too high. The lithium price right now, around $10,000 per ton, is completely fine for all the companies to make a huge margin. So all the companies that are in production are making lots of money. The problem is not to make more money. The problem is we need enough new companies, new projects that are finding their way into production.
Yeah.
Copper, I think for copper we need a lot of money. That's the main issue for copper. Copper, the small copper projects are gone. So we are really looking for the huge, major $5, $6, $7, $10 billion CapEx projects that are mainly will be in Chile, for example. So we need the big majors to commit a lot of money towards copper. If they do, we will have enough supply. If they don't, we will have a huge supply gap.
And then,
of course,
spike of the price, of course. Great, super. Well, that sounds all very compelling, and I think it's a good future, Tobias. Thank you very much. And yeah, we will check out how your fund is doing, of course, and look forward to an update very soon.
Perfect.
Thank you very much. Yeah, ladies and gentlemen, there was Tobias Tretter, the fund manager of the Next Generation Metals Fund. And yeah, you heard it. There's a lot coming ahead within the next 2 to 3 years. And yeah, it's getting interesting because, first of all, e-mobility will take its share of the lithium market. Cobalt, as you heard about, is maybe a little bit more on the, let's say, slower growth side, but lithium definitely will, yeah, create a little bit of a supply problem with all the demand in the e-sector coming up. And also it looks quite good for copper. And as we always were discussing already on Commodity TV, we need the big projects, we need the big mines, and a lot of money, as Tobias said, has to be invested in the future. So it's a great market, a great place to be. And I would suggest you check out his fund because he's doing a great job. Thanks for watching us, and bye-bye from Switzerland.